In today's The Market Report, we'll discuss if the Federal Reserve interest rate decision on Wednesday is behind the recent Bitcoin price pump. Plus, I'll explain if the SEC really faced a loss after a judge denied immediate access to Binance US servers and software. Hello everyone, welcome and thanks for watching the Market Report. I'm your host Marcel Pechman, analyst and writer at Cointelegraph. The show debates the most pressing topics impacting the crypto market, focused on price change and meaningful events. Today's show starts with an article written by Kyle White. Bitcoin price gains strength ahead of the FOMC, with investors betting on an interest rate freeze. According to the September 13 CPI report, inflation rose 3.7% in August, higher than at 3.5% in July. More importantly, the annual core CPI model, which measures all items minus food and energy, showed a more positive data. August annual CPI core came in at 4.3%, less than the previous month jump to 4.5%. The potential that inflation might reach the US Federal Reserve's 2% target is providing hope that interest rate increases will pause at the Federal Open Market Committee (FOMC) meeting on September 20, an outcome that investors believe benefits risk assets like Bitcoin. Okay, first of all, I don't agree with the author's statement that the latest 3.7% August CPI is an indication that the Federal Reserve's 2% target is within reach. Quite the opposite. I don't know exactly what was the base for this thought, but the fact that most market participants expect interest rates to remain flat doesn't prove that hypothesis. So here we have the CME target rate probabilities, implied probability for the next September 20 Federal Reserve meeting, and we have 99% of the participants expecting the current target rate of 5.25% to be maintained, and only 1% expecting an increase. So the major consensus is for an interest rate pause, so no change tomorrow on Wednesday. For starters, any interest rate change right now would only impact inflation within 3 to 6 months, not earlier than this. Moreover, the latest interest rate increases caused financial instability, especially in the regional bank sector. The Federal Reserve was forced to inject $300 billion of a special credit line just to avoid a bank's collapse. If raising interest rates was the easy solution for inflation, the central bank would have raised from 0.1% to 5% in a single move. But that was never even considered because they knew well in advance the adverse impacts. Similarly, the market knows how fragile the economy is right now, so it makes no sense for the Fed to further push interest rates, as the current inflation reflects how much money was injected over the past 3 to 6 months, not what the interest rate will be on September 21st. Meaning, if consumers are not demanding credit, if they're not buying on the stores, if the business are not hiring and expanding production, what is the benefit of an interest rate increase? My point is, yes, most market participants expect an interest rate pause, but that doesn't mean they believe in a soft landing, that the inflation will miraculously go down from 4% to 2%. That's not what's happening here. The investors are simply saying if the Federal Reserve further raises interest rates right now, it will crash the economy. And they don't want to do that because they will have to inject additional money to save the banks. So it's not worthy right now. Moving on to the second part of the article, Bitcoin supply and exchange keep dropping. Coinciding with Bitcoin's price gains, the Bitcoin supply and exchange continues to remain below the September 4 monthly peak. Crypto exchange have shed over 40,000 Bitcoins since then. So let's check it, the chart, and you can see that the gray line is the Bitcoin balance deposit on exchanges estimated by CoinGlass. And you can see that there was a pump here on September 4 where it was the largest balance within the month, and it has been going down for the past 2 or 3 weeks. So yes, the balance, the Bitcoin deposits on exchanges has been on decline for the past 2 or 3 weeks. Bitcoin leaving crypto exchange is generally perceived as a bullish signal since the available supply for selling decreases. Now, do I think that that is the reason why Bitcoin has been trying to pump above $27,000? Absolutely not. The trend of lesser deposits on exchange has been ongoing for the past months, so there's nothing new here. However, if there is a large entity, perhaps MicroStrategy, aggressively accumulating and driving the price upwards, then the less number of coins deposited on exchange will cause additional volatility, meaning the price will sharply increase when the buy orders are activated and subsequently decline every time the activity stops. This happened because of the front runners closely tracking the activity of market makers and Coinbase Exchange, the preferred venue of sailor and institutional investors. Still, could the activity be merely FONC related, so related to the Federal Reserve decision on Wednesday, meaning that investors expect Bitcoin price to pump tomorrow if the rates remain flat at 2.25%? It's hard to tell, but I would not expect that to happen over 24 hours ahead of the event. So the pump is unlikely related to the FOMC meeting in my opinion. Now moving on to the next part of the show, an article written by Tom Mitchell. SEC sees temporary setback in request to access Binance US software. A federal magistrate judge has denied a SEC request to gain immediate access to Binance US software, asking the regulator to provide more specific requests for discovery. In a hearing, Judge Faruqi said he wasn't inclined to allow the inspection at this time. Alternatively, he proposed that the SEC should come up with more specific requests for discovery and speak with a broader range of witnesses. Okay, so looks like there's a little information hidden in there. From the outside, it looks as if the SEC faced a loss on court, but that's not exactly what happened. The judge explicitly said he was not super confident that Binance US had total control of their assets and stated that the exchange has to provide further evidence. Binance claims that its wallet service provider Seifu is not controlled by Binance International. Meanwhile, the SEC is asking to collect depositions from former Binance US directors, although Binance has been reluctant about it. From the looks of it, Binance is trying to delay the inevitable, because at least until March 2023, Seifu was part of the Binance International structure. So the judge set an October 10 deadline for a joint status report and a follow-up hearing on October 12. So most likely, CZ and Binance got what they wanted, a 3-week extension to either provide documents that would confirm their statement or simply draw an alternative plan to shut down Binance US and continue operating using a middleman for fiat transactions. Still, the bigger question remains: why would the market pump ahead of the court documents unsealing, which was requested by the SEC in the first place? My best guess is, as soon as those whales realized that there was nothing incriminating against Binance, they decided it was worth trying to liquidate short sellers. The problem with such plans is that we never know how the market will react, more specifically, the movement on the spot market, the investors that are not speculating using futures contracts. Perhaps multi-million sell orders popped on OTC desks as soon as Bitcoin broke above $27,000, or other whales decided it was time to bet against the Bitcoin price at $27,200, given the FOMC meeting on September 20. The biggest take from the event is the remark from the judge against Binance. So the SEC might have faced a temporary setback. But can Binance really pull this one off and dismiss the accusations? Highly unlikely, but one should never take for granted CZ's ability to circumvent limitations imposed by regulators. Plus, we all know Binance US volumes have already faded. Consequently, losing direct market access and supporting a fiat gateway partner might be the best outcome for Binance. Just to highlight, that's my own personal opinion, and it does not necessarily reflect Cointelegraph's official view. Well, that's it for today. Hope you guys enjoyed the show. Don't forget to visit Markets Pro, the official Cointelegraph alerts platform. Our proprietary indicators have been giving profitable alerts for months. There's a 20% discount link in the video's description. Thank you.